Assalamu alaikum. So we are considering the working capital MCQs, some important one. The first one is here: a company's typical inventory holding period at any time is given to you as raw material 15 days, work in progress 35 days, and finished good 40 days. Annual cost of goods sold as per financial statement is 100 million, of which the raw material purchases account for 50% of the total. So it means that a raw material purchase has a value of 50 million, 50% of 100 million. The company has implemented plan to reduce the level of inventory held, the effect of which are expected to be as follows: raw material holding time to be reduced by 5 days, while production time and finished good will be reduced by 4 and 5 days respectively. Assuming a 365 days a year, what will be the reduction in the inventory held? So we have to find this in amount. For this, first we have to convert or find out the amount of raw material inventory. So how to find this? There is total 50 million of raw material purchase, multiplied by holding period of raw material is 15 days out of 365. So it will give you 50 multiplied by 15 divided by 365. So it is 2.0547. 2.055, we can say 55 because we have to consider the answer up to 3 decimals. Now next, the work in progress is 35 days. The cost of sales is 100 multiplied by days are 35 divided by 365. So the value of cost of goods sold is inventory in work in process is, this is 9.589. 9.589. And as far as finished good is concerned, it is 100 million multiplied by 40 days of finished good inventory holding period is, and 365 total, and this will be 10.958 or 959. 10.959. So this is the value of raw material inventory 2.055, work in process inventory 9.589, and finished good inventory 10.5959. So first we have to find out, after the reduction, what is the value of raw material inventory as it is reduced by 5 days. So we can calculate this as 2.055 multiplied by 5 divided by 15, and this will give us a value of 2 point this divided by 3 is equal to 0.685. 0.685. So this is the value of raw material inventory after deduction. Then 9.589 is the value of work in process inventory, and it is to be reduced by 4 days, and previously it was held for 35 days. So we can calculate this as multiply by 4 divided by 35. So it will be 1.096. 1.096. And as far as finished good is concerned, their value of inventory is 10.959 multiplied by days reduced divided by days already held. This is 40. So this will be 10 point multiplied by 5 divided by 8. So this will be 0.685. Again, I will calculate 10.959 multiplied by 5 divided by 40. So it is in fact 1.369. After adding all these three, 0.685 plus this, the answer is 3.150 or 3.151. So this is your fourth option. Now in the next question they are asking us, D company decided to offer a 2% early settlement discount that half of all customer take up. They pay in 1 month instead of the usual two. So it means that after this offering this discount of 2%, the receivable period reduced from 2 months to 1 month, and D company pays 10% per annum for its overdraft facility. So in this case, in this change of policy case, we have to calculate the cost that the company has to bond in form of discount offer, and the benefit that company can save by reduction in receivable and hence in receivables interest on the reduced receivables. But in this question we have not been given the amount, so we can only calculate in terms of percentage. First, they have asked us to match the item described to be expected impact from this policy, cash operating cycle. As the receivables, the period of receivable days are reduced from 2 months to 1 month, so it means that cash operating cycle will also decrease. Now it is about reporting profit. We are offering discount of 2% and it will cause a month earlier in payment. So we can say that we are offering 2% discount per month. Every month we are offering 2% discount. This is a cost for us. And the saving that is created is 10%. 10% per annum. And this saving of 10% per annum, if we convert it into month by dividing this by 12, we can have a value of 10 divided by 12. It is approximately 0.83%. So benefit is 0.83% while cost is 2% per month. So it is not valuable for us. The cost is greater than the benefit. It means as a result of increased cost, the profit will be reduced. Now it is a easy question, a very common question. WW company has a current ratio of 2 million, receivables are 3 million, current liabilities are 2 million. What are inventory days? So to find out the inventory days, we need to know information about the inventory, value of inventory. The cost of sales is 10 million and the cash balance is 0. It means that we have the current asset that consists of only inventory and receivable. As we have been given the current ratio formula is current asset divided by current liability. Current ratio is 2. Current assets are only consist of inventory and receivable. We don't know about the inventory, but receivables are 3 million and the current liabilities is 2 million. So if you solve this, you can find out the value of inventory. So it will be 4 million is equal to inventory plus 3 million, and then inventory's value would be 1 million. Now we have to find out the inventory in days. For this, inventory should be divided by credit sales or cost of sales multiplied by 365. So inventory value of inventory is 1 million, cost of sales is 10 million, multiplied by 365, so it will give us an answer of 36.5, right? Now next is a question, which two of the following statement about our capitalization and our trading are correct? So remember that our trading means under capitalization. Remember that fact that our trading means under capitalization. So first is our trading often arises from a rapid increase in sales, right? It is absolutely right, because if you are extended your credit policy, you are giving extended credit period to your customer, it means the customer will demand more, and you have to sell more and your receivable will increase because you are offering an extended credit period. So as a result of offering extended credit period, sale will increase. So this is true. Second, our capitalization result in a low current ratio. Our capitalization means that our capitalization is a situation where we have more debt and equity than assets, right? If we have more debt, we have received more amount in debt, then it means that cash will be increased. So if cash is increasing, it means that this is a positive impact on the current ratio rather than negative impact. Third point, our trading may result in a relatively high account payable turnover period. So it is true, because if you are giving your customer extended credit period, it means you may want extended period from your supplier. So the word may make this true. Our trading may result in, it might be result in that you take a high account payable period in order to pay to your supplier. The fourth one is our capitalization is a result of too much short-term capital. No, you have more long-term and debt and equity available for you than asset. This is said to be the over capitalization. So it is 1 and 3. These are true. Next is a company has annual credit sale of 27 million and related cost of sales is 15 million. The company has following target for the next year. Trade receivable days are 50s, inventory days 60 days, trade payable 45 days. Assume there are 360 days in the year, right? What is the net investment? So for this we have to calculate this. If we are calculating this, the amount of receivable, this is 27 million of credit sales multiplied by 50 days of receivable divided by 360, so it will give us a value of 3.75 million. Then the cost of sales is given to us as 15 million. 15 million multiplied by 60, because 60 days of inventory, divided by 360 days. Remember that to find out the amount of receivable, we can use the formula credit sales multiplied by receivable days divided by total receivable. Same like that, cost of sales multiplied by inventory day divided by 360. And for payable, the cost of sales multiplied by payable days divided by 360. So hence the amounts are 3.75, 2.5 and 1.875. So we will consider it as 3.75 plus 2.5 gives you a value of 6.25, and then subtract 1.875 from this. 6.25 minus 1.875 give you a value of 4.375. So 4.375 means the second is your option. Now it is about TS has a daily demand for ball bearing of 40 a day for each of the 250 working days. The value of ball bearing is also, all information is given to you. You have to calculate the economic order quantity. Remember that if the holding cost is mentioned in terms of percentage, you have to take the 25% or any percent of your purchase price, whichever is given. So now it will be the next question where you have been given the buffer inventory level, reorder size and all other things, and they have asked us what are the total inventory cost. For the total inventory cost, we have to add the total purchase price plus total ordering cost plus total holding cost. In this question, for using the formula of total holding cost, we have to use average inventory as or directly we can find out the formula buffer inventory plus order size divided by 2 and then multiply by holding cost per unit, and which is given as 1.25. So this is how we will calculate the inventory cost. So holding cost, inventory holding cost. So that is how it has to be solved. Next is, which of the following statement concerning working capital management are correct? Number one is working capital should increase as sales revenue. So it is correct, because as sales increases, our receivables increases and we need more investment in working capital. Working capital will increase means when there is a sale, it turns into receivable and inventory turns into receivable, and more of our inventory converted into receivable, as inventory is to be valued at cost and receivables are valued at sale price. So that is why working capital should increase as sale increases. Second, an increase in the cash operating cycle will decrease profitability, obviously, because if there is an increase in cash operating cycle, it means receivable days are increasing. If receivable days are increasing, we need more investment, we need more financing, and more amount as we need, or for a longer period of time we need finance. So we have to pay more interest costs on these finance. So that is why profitability will reduce. Our trading is also known as undercapitalization. This is also true. Next is, Wellness company has an annual credit sales of 4500,000. On an average, customer take 60 days to pay, assuming 360 days a year. As a result, Wellness company has a trade receivable balance of 750,000. So this is given to you. The company relies on an overdraft to finance this at an annual interest rate of 10%. Now, wellness company is considering offering an early settlement discount of 1% for payment in 30 days. If a customer will pay in 30 days, he will be offered a 1% discount, which is a cost for the company. It is expected that 25% of the customer, which represent 35% of the annual credit sales, will pay in 30 days in order to obtain the discount. If Wellness company introduce the proposed discount, what will the net impact? So we have to calculate what is the reduction in receivable and ultimately reduction in interest cost, and what is the cost of this discount. So approach to this type of question is that first you have to find out the reduction in receivable. As a result of this, the sale was 4,500,000. 4,500,000 is the value of sale, right? And 35% of customer will receive that facility of discount. And as a result of this discount, the receivables were previously 60 days and now they will reduce to 30 days. So the receivable are reduced by 30 days. So this is the reduction in receivable. So it is a reduction of 1,31,250. Reduction is in receivable is 1,31,250. So if the receivable reduced by 1,31,250, our saving would be 10% of this, and this would be 13,125. This is the same for us. Now we have to calculate the cost of discount. 4,500,000 is total sale and 1% of discount is offered and 35% people will avail that discount. So this will be 15,750. So discount is more than the benefit. 15,750 is the cost and saving is 13,125. So difference is 2,625. This is the net cost. So option is D, 2,625 the cost.